Good morning, ladies and gentlemen, and welcome to the earnings conference call for Q4 FY'25 for EMS Ltd. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the management discussion concludes. Should you need assistance during the conference call, please signal an operator by pressing star followed by 0 on your touch-tone phone. EMS Ltd was incorporated in 2010 by Mr. Ramveer Singh and Mr. Ashish Tomar and is involved in the business of sewerage solution provider, water supply system, water and waste treatment plants, electrical transmission and distribution, road and allied works, operation and maintenance for wastewater scheme projects and water supply scheme projects for government authorities. Let us now begin with the introduction of the management team. We have with us today Mr. Ramveer Singh, promoter and chairman of the company. Also joining us today, Mr. Ashish Tomar, promoter and managing director, and Mr. H.K. Concall, CEO. I would now like to request Mr. Ashish Tomar, promoter and managing director of the company, to introduce Mr. H.K. Concall to give his opening remarks. Thank you, and over to you, sir.
Yeah. Good afternoon, everyone. Thank you for taking time out of your schedule for this earnings conference call. We are happy to come in front of you with good set of numbers. So, Mr. H.K. Concall, who has joined us in the capacity of CEO, I would like to give a brief introduction about him. He is an IIT graduate in civil engineering, and he graduated in the IIT with gold medal. After that, he joined UP Jal Nigam, and he had an extensive service in which he had opportunity to execute large-scale water supply and sewerage projects. He eventually retired from UP Jal Nigam at the level of engineering chief of the whole state. Since then, he has been our mentor. So now I would like to hand over the call to Mr. Concall for the opening remarks.
I am H.K. Concall, and as Mr. Ashish said, I have quite a lot experience in this field. I am giving my guidance since last 2 years to the company, and now I have formally joined as strategic head and CEO of the company. The company EMS Limited is all about the company who executes and maintains the work of water supply and sewerage and environmental engineering, and 70 to 80% business comes from sewerage and water supply works all over India in every state, and mostly the works are funded by the central government agencies, JICA, World Bank, or central government aided, which are executed at the state level. And the works, as we know, for water supply and sewerage, it is all executed for municipal corporations and various government programs in central governments like Amrit and Jal Jeevan Mission and other programs of World Bank, etc., who funds for this, and state governments give the share along with the municipal corporations. So we are one of the top 6-7 players revenue-wise in India who works in this field, and we are established player since last around 10 years in this field. And the chairman of the company, Mr. Ramveer Singh, was working for almost 20 years in government sector in this field only. That is why he thought to establish his own company, and this company is growing since last 10 years with a CAGR of around 20% continuously. As far as the results of this quarter is concerned, the consolidated revenue in this quarter is 272.07 crore against the revenue quarter ended 31st March 2024 is 245.92, and the profit is 46.92 this quarter as compared to the earlier quarter of 47.38. And as far as annual results are concerned, in FY'25, we have achieved the revenue of 965.83 crore against 793.31 crore, which is a growth of 21.74%, and it is a robust growth which we are continuously giving since last 8-10 years as a CAGR. And the PAT is 183.78 crore against 152.66 crore, which was in FY'24. This is again 20.38% growth in the PAT also. And now, if you see about the quarter's earnings, the profit of the quarter is 46.92 crore against 47.38 crore, which is slightly less than about 1% less in comparison to the previous year. While we have executed the work, while we have earned the revenue of 265 crore against 245 crore, which is 20 crores higher. The basic reason is this, that whatever government works we procure, usually the procurement is on competitive basis. And the nature of the project, sometimes we have to procure the work on some less margins, say about 15-20%, and sometimes we have to procure the work, say about 30 to 35%. And this is not a linear exploration or linear extrapolation of the works, and the works executed in the last quarter is of the nature in which margins were slightly lower. Even then, we have maintained almost the same type of margin over a increased revenue. So this is all about this type of industry, because there are certain works and the billing cycle is also typically of 75 to 19 days. So earlier quarters billing, which is of less margin, could be realized in this quarter, and similarly the more margin work can appear in the coming quarter or the present quarter which is going on. So these are our robust results, and we were guiding these results since beginning and in so many conferences, and we have achieved a overall growth of around 21 to 22% in terms of revenue and 20.38% in terms of PAT also. So this is all about this opening statement, and the order book at present is 2236 crore of unexecuted works, and we are in the process of tendering in different states and in different projects. That is of the order of 4,500 crores as of now, and our conversion rate is 10-15%. So we can easily procure the order of 600-700 crores in this quarter or in coming quarter. So that is from my side. I think I have elaborated about the results and the business of the company and our order book and our tendering in pipeline. And one more thing to be added is that in water sector, typically we are having 20,000 rupees per capita work in metropolitan cities or in urban areas, and 10,000 rupees per capita work for water supply. So as a whole, it contributes about 12 lakh crore rupees work scope, out of which 4 lakh crore, 5 lakh crore has been executed so far. So it's a tremendous scope, and the annual budget of water supply and sewerage sector, including states, is about 1 lakh crore per annum, which has to be executed continuously, because the old assets comes in dilapidated conditions in about 25 to 30 years in this particular sector, particularly sewerage sector, due to corrosion and so many things. And the expansion of the cities and density increase of the cities continuously increase the scope of the work, either through the reorganization of the work or laying the parallel lines or laying the new lines in the expansion areas. So we are in the business which is growing heavily until the time human being is there on the earth. The scope will remain there in India, and India is also going to be a water scarce country. So desalination plants and other things and recycling of the water, reuse of the water, tertiary treatment of the sewage will come into force. That has already come and that will remain continuously to come. So as far as the scope is concerned, we are in the field which has a tremendous scope, and we are about 1 to 2% of the total scope of Indian context. So we are in very good business. We are growing with the sustained rate of 20-25% per annum, and we are looking forward up to 30%. We can see 30% growth in coming years as an organic growth, because there are so many retentions and so many things. So 30% growth for maintaining a positive cash flow or something, we are very well into it. And we have shown it in the last 8-10 years to give this type of growth. That's all from my side. Thank you so much. If there are some calls and questions, we would be happy to reply all of them.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have our first question from the line of Aman Soni from Invest Analytics Advisory. Please go ahead.
Hi, am I audible?
Yes, sir.
Sir, I have 3 questions. One is on US AID fund stoppage and coupled with recent reduction of central share to JJM, Jal Jeevan Mission. So I want to understand from you what kind of impact these 2 changes are going to do in the next 1 or 2 years in the terms of the order inflow and thus our growth.
Yeah. So first of all, we do not execute any work that is funded by USAID. So this stoppage of funding is not going to impact us at all. As far as your question about JJM funding is concerned, I think central government has not reduced its share. The states had sent the request for increase in budget, and that I think was denied by the center, and states have to finance them from their own resources. Whatever budget the central government has proposed earlier, the central government is, I think, already paying it. The increased cost is due to, I think, escalation and other factors.
So if center is going to deny it, then are you sure states will be comfortable, or they are not going to reduce the entire budget and thus our growth is going to be impacted?
No, sir. See, the funding was carried out on the basis of estimates. In some states, the works were awarded above the estimated value. So if the government, central government committed to finance 50% of the estimated cost, say a work of 100 crores, and the state government has awarded it at 130 crores. So the central government is going to pay its share of 50 crores. The work value above which it has been awarded 30 crores, that is have to be financed by the state. Anyway, we are not executing any projects in the JJM sector.
Actually, JJM sector is a sector which is entrusted for water supply in the rural areas only. And we are totally handling the urban areas for water supply and for sewerage also. Because in rural areas, there is only one first priority of water supply. And in second priority, if they have to treat the water, they have to treat it not for very strenuous, not for very tight or exorbitant type of treatment, and that is being covered under Swachh Bharat mission basically. So eventually we are not having the work because the ticket size in rural area is not that big. And we are particularly having ticket size of 200, 250 crore or more. So we are not into water supply. Even then, I will like to make clear that in Jal Jeevan Mission, there is a government, central government share and a state government share. And due to the preliminary surveys done in rural areas, because I was handling with rural water supply also, the estimated cost was very tentative. Say, for a village, it was 50 crore. And when the detailed estimate was made, it was 75 to 80 crore. And when tender were invited, it could be 80 crore or 90 crore. But central government, as per their condition, was to fund only 50%. So they had to pay only 25 crores of the estimate, which was sanctioned through the state level technical committee under the chairmanship of chief secretary. So they are bound to give 25 crore. Now the state government has to give balance 50 crore, for example, if it is a 75 crore revision. Now the state government is somewhere, some state governments are asking that they should give the additional 25%. So the government has, central government has denied it with the simple reason because this was not their condition, number one. Number two, the thing was that some state couldn't do the work in time. So central government has extended the time for the grant also. So it looks virtually like central government has reduced their share, but it is not a fact because they have given the extension. So if they had to fund 200 crore rupees in a year, now they may be funding it in a year and a quarter, or a year and a half. So it looks like that per annum budget had decreased. So that is a virtual number. It seems like that per annum budget has decreased, but actually the total budget has not decreased. Whatever was the commitment of the central government, it will remain with them. But in some states which are not very rich in that term, or they have not allocated the fund for water supply and sewerage, they may be given that money in an extended period. Eventually we are not in that. Even then I have tried to explain what is the reason it looks like that central government has cut their share or central government has reduced the budget. Actually it is not the fact. So this condition is like that only.
Got it, sir. Very decent explanation. Sir, secondly, on the margins front, I remember when the year when IPO came, we used to talk about the reason for these higher margins in the range of 30 to 31% we used to get. The reason was simple, like our projects were getting funded by the world organizations, right? And we were very much committed to maintain these kind of margins via participating in those tenders only, which are giving us the higher margins. But if I fast forward from 22 to now, like 25, there is a significant dip in the margins, like from 31%, it is now 26% kind of EBITDA margins that we are doing. So what is this sudden shift that has happened over the period of this 2 to 3 years, and how do you think, like, what kind of margins will we be able to maintain going ahead?
Okay, it is a type of business, as I have already said, in which sometimes we have to take work on some strict competition basis. Otherwise, if the pupil, our comparison, our peers know that we are going to bid for a 25% or 30% margin, we are never going to get any work in our field. So somewhere we have to be tight also, just to play with the competitors. So in this case, what happened, if you see our standalone profit, it is still in the range of 30%. But as a consolidated, there was a SPV company who were having lot of work last year, but not billing this year because the work has already been completed. That was a marginous work. It was a SPV and it was a good business margin work. So the margins will remain around 25 to 30%, and PAT we will try to maintain 20 to 22% type of thing. And continuously we are doing that. If we increase the business size slightly, it may impact profit in very small quantity because volume-wise profit is increasing, but maybe percentage terms it is slightly decreasing in some decimal points or something. because if you grow with the pace rate, some cost of the employees, some cost of the supervision may increase. And I think second part you have asked, why we maintain better PAT than other peer companies. So obviously we have 6-7% higher PAT in comparison to other companies because of 2-3 simple reasons. These projects are EPC projects mainly. And in EPC project, first of all, we have to do the engineering of the project. That is technical design and all that even before tendering. So that is in-house facility we are having. We are having about a force of 75 engineers who look for the design, who give the work. Generally, the companies of our size do not have the in-house facility of engineering and design, and they have to spend 2-3% extra cost for designing through the outsource agencies. So that is our edge. Second thing is our company, our chairman, he was working with UP Jal Nigam in sewage and water supply system. So we know how to play in the depth, in the dia, in the material, and all the things, whatever flexibility as per the bid document we have got, we utilize it to the maximum. Third thing is we give our vendors, who are our labor contractors, petty contractors, which we call, the advance payment or payment which in 15 days only. Nevertheless, we are getting the payment in 2-3 months period from the government, because on that ground we get a discount of say 3-4% from the vendors also, and that is how we work on the ground level. It's a corporate company now, but even then it is just like a contractor's company, because we are a ground level workers, because basically in big companies like L&T, Vatek, Wabar, they are having a huge infrastructure in terms of manpower, in terms of T&P, in terms of so many things. We usually hire the T&P, number 8. We usually give the T&P, who is our labor contractor, we provide the T&P to the labor contractor itself and cut the money. So he is happy that we have given him a fork lane, we have given him a JCB, and we are not at any loss. We are getting discount from him, and the cost is also being recovered from his wages. So this is some management skills and management styles that we are having age of about 6-7% above other peer competitors in this field. So I think this answers your query.
Yes. Got it, sir. And lastly, on the guidance front, you mentioned 30% growth for FY'26, right? So does that mean the same growth will be in the bottom line as well?
I think we are always planning to grow with the rate of 30%. That could be 27, 32, like that. And we are planning to maintain the bottom line above 20%. That is our guideline for future.
So that means we are looking for a further...
Because we have done it in last 10 years. Our CAGR is around that only.
That I agree, sir. But when you say we are growing top line by 30% and bottom line by 20%, so this means there will be a significant dip in the margins in this year as well, right?
No. Actually, we are trying to get 30%. If we get 30%, our margins will also grow around 30% only. That's obvious. But we are trying. We have achieved this 30% this year also as a standalone basis, and as 22% on a consolidated basis. So if 25% is our achievement, we will feel that we have done well. And if we look at 30%, we will get it 25%. And our standalone growth is 21.74% year on year, and our consolidated growth is also 20.38% year on year basis. And stand-alone, our growth is 21.55%. Actually, this is not an industry which is something manufacturing and selling a day-to-day basis. There are certain things, certain complications sometimes come, and some more marginous works are not paid in that particular quarter or even in that particular year also. And some less marginous work can be paid in this year, so they can enhance the revenue, but they cannot pro-ratally enhance the margins. And in the next quarter, it may happen that growth in terms of revenue is 25% and margins growth is more than 25% because more marginous works have come into payment window. So this happens in this type of industry. Sometimes too much variation is there, but in our case, it's not too much variation. It's a variation of about 1%, 1.3% only.
Okay, sir.
Thank you. We have our next question from the line of Darshil Pandya from Finterest Capital. Please go ahead.
Hello, am I audible?
Yes, sir.
Hi, sir. Good afternoon. Sir, my first question would be with regards to the execution of this quarter. Did we face any execution challenges for this quarter? Because
no, sir. No, I do not think that we faced any challenges.
Okay. Okay, got it. And sir, just to understand from the current order book that we have around 2,200 crores, what would be the timeline for this order book to be completed?
I think almost about 90% of these works are going to be executed in the coming couple of years.
Actually, this order book is a continuously increasing and decreasing. If you execute the works out of this order book and simultaneously you are getting the orders also. In this typical industry, we divide it by 2.5. If we are having an order book of 3,000 crores, we can complete the work of 1,200 crores. This is general practice in this water supply and sewerage sector or building works. So safely we assume that 40% of the order book we do execute. But because this is at the time of opening year 2236, we are likely to get minimum 1,000, 1,500 crore orders in this coming 2 quarters. So this will keep running and flowing and we will be able to achieve our growth of 25 to 30% in terms of revenue very easily with this order book because there are certain orders which are 90% already completed. There are certain orders which are only 10-15% completed and we are going to get orders from that 4,500 crore rupees tendering which are in pipeline. So we will convert it every quarter at minimum 10 to 15%, that is 500-600 crores rupees order we will get in every quarter. So by the year end, we can have the order book of 3,000, 3,500 or 4,000. That depends upon in how much tenders we do compete. So that's it about.
Thank you. Got it. That was something that I was asking for. And last question would be, sir, on the cash flow side. Sir, in the last 3 years, we have seen, debtors also increasing from 84 to 142 and, our working capital is getting a bit heavier. Should we be, be concerned that more cash is, getting stuck in our system? And what's our team, what is our team thinking about it?
This is the nature of the business and the government EPC business. About 10% of the project value is withheld by the government till commissioning of the project. So, as our revenue increases, they are going to be increased in the debtors level. Also, I think, but as far as cash flow is concerned, I think our cash flow has been positive this year.
Correct.
Yeah.
No, I just wanted to understand, sir, how our payments cycle actually work with the government. 10% we get in advance, and how is the rest 90%? How do we see that?
So the payments are carried out on monthly basis. So each and every month we present a running bill for the work executed in that month. Then that bill is checked at the division level at which the work was executed. Then it is forwarded to the project management consultancy. After vetting by PMC, this bill is forwarded to state headquarters mostly for payment process. So this process takes time of about 90 to 100 days on average.
So probably if you raise a bill in January, we get it somewhere in April. This is what.
Yeah.
This is what.
So it's a cyclical process.
Okay, got it. All right, sir. I'll fall back in the queue. Thank you so much for taking my questions.
Thank you. We have our next question from the line of Reet Ranawat from Aventus Capital. Please go ahead.
Yeah, hello, am I audible?
Yes, sir, you are.
Yeah, so could you tell me, could you provide me a detailed breakdown of those QIP that you mentioned in your last con call? What happened about it and the utilization of that fund?
We have not yet carried progress with the QIP.
Market conditions.
As we figured that the market conditions are not suitable, so I think we postponed it. And as and when the market improves, I will take a call on that.
Okay, all right. Sorry?
Hello?
Yeah, what are you saying?
I'm saying that we have not yet gone for the QIP. We are planning on it, but since the market conditions were not favorable, there was a dip in the market. We did not go for it. We have not raised any funds. As soon as the market improves, we will take a call on that.
We have no issue.
We currently do not have any financial crunch. We were just planning to raise the funds for future projects, which we are planning to bid for large-scale hybrid annuity model projects. So for that, we would require the funds. Currently, we do not have any such requirement.
Okay, all right. Could you tell me, comparing to your peers, your success ratio is low compared to the peers. So is there a reason for that? Hello?
Sir, I can't hear you properly. Can you please speak up?
So is there a reason why your success ratio is lower than the peers in this industry?
Success ratio of the bid that you are asking for?
Yeah, bid ratio, yeah.
Yeah. So I think considering the margins that we secure, I think 10 to 15% of the success ratio on the tender bid for is a good ratio. And we can always bid for more projects if we plan to take up more projects. But this industry also has a constraint regarding how much work I can take up. That is calculated by my bid capacity, which will progress slowly as my revenue increases. So even if I want, I cannot take up projects more than 4 times my revenue.
Okay, got it.
Yeah.
And one more question was that, given your asset-light model, so how would the power and real estate vertical will fit into EMS's operational and financial DNA? So, could you give us an idea about that?
So, the voice is not clear. Can you please repeat the question?
So, EMS follows an asset-light model, right? So, how would power and real estate verticals fit into EMS's operations and, some idea about it?
Yeah. So, we are in power sector, we are executing distribution works. So, for that, we do not require to invest huge amounts of money in the assets. It is mostly supply works coupled with the execution of the projects on the site. So I think it goes well with our asset-light model, and I see no problem in taking such kind of works.
And real estate? In that, how would you operate? In this company, we are not doing any real estate.
In this company, we are not executing any real estate projects.
Okay.
We are only taking up EPC projects.
Contractor.
Okay.
Yeah.
Thank you. We have our next question from the line of Pankaj Motwani from Equirus Securities. Please go ahead.
Hello. Am I audible?
Pankaj, you need to be a little louder.
Yeah, okay. So, sir, my question was on the part of the acquisition part. So, like in this Bihari balance sheet of FY'24, like so there is a 58 crore of related party borrowing, while the land and building value, which is our core interest for the EMS, so it is valued at around 38 crore only. So, like given that the total borrowing are exceeding the assets which we have interest, so like even the company's book value is just only 1 lakh. So, like, can you please explain the rationale behind paying 7.75 crore for this 60% stake in this company? Like, how was this valuation derived?
Yeah. So, this company was acquired through NCLT. And, yeah. And initially, we were having 4 partners. But since we need to put up properties in shape of collaterals to the bank, our partners exited this company at the value which it was acquired with NCLT. So we acquired this company at the NCLT value only, and I think the registry has been carried out. And mortgage this property and we are going to mortgage this property in the bank for our fund and non-fund based facilities.
What is the value of this land and building? Because we have also the borrowings which we as we are acquiring this company, so we have a borrowing for 60 crore also coming in our EMS books. So I don't understand the rationale behind because the land value is much lower than the borrowing.
Hello. Yes, I think the only borrowings that on our book, I think, would be in the range of about 75-80 crores, and almost all of it is related to financing of a HAM project in our subsidiary Mirzapur Ghazipur projects. In this company, EMS Ltd, I don't think we have any debt.
No, I'm talking about the Bridge Bihari book. So in Bridge Bihari, there is in FY'24 book, in FY'24 balance sheet, there is a borrowing of 60 crores from our related parties only.
Loan from directors and shareholders. It is a loan from directors and shareholders.
Yes. So that's why I'm asking. So in Bridge Bihari FY'24 book, there is a 60 crores of borrowing, and against which the assets are on the land and building which we have our core interest. So that, so the value of the same is only 40 crores. So what is the rationale behind this?
So that money was used to acquire the land that was acquired from NCLT. So that loan is for that purpose.
So what is the value of this land?
I think it would safely be in excess of 60. Value? Yeah. More than 100 crores. More than 70-80 crores, safely. And so we are getting the valuation done, and after that, this property is going to be mortgaged with the bank.
So, as per the the company incorporated on January 23 only, and the balance sheet will represent only the cost part on, I think. So as per the balance sheet, the land and building comprise of 40 crore only. So how can you say that the market value is much above than the cost? I don't understand. Even into in the 2 years, the market value can double. The land and building value is only 40 crore as per the balance sheet. So how can the market value, you are saying 80 crore of market value, so how can this happen in 2 years only?
So the land is in excess of 1,50,000. About 1,50,000 square yards. And 5 lakh square feet of area was constructed. Area is already constructed on that plot. There was also plants and machinery. We got this deal on a discounted basis as the property was stuck in NCLT. we are getting the valuation done. Yeah.
Okay, so can you tell me the net worth of the company? Like, so what is the net worth? Because there are also no revenues in this company. What is the net worth, like the equity versus return surplus? What is the net worth of this company?
The property in the bank and we are not interested in generating any revenue in that company. That is only an asset holding company, and we are going to mortgage this land in the bank for securing bank guarantees that we need for executing our projects.
So just want to confirm, like as you are saying, the land and building value is 80 crore and the book value is 40 crore. So am I right? Like the book value is 40 crore and the market value is 80 crore.
Yeah.
Okay. And yeah, one more question. So like as per the ICRA monitoring report, which was released in the January 25, so like out of the 137 crore of IQ proceeds, so 34 crores was earmarked for the general corporate purpose. And out of this, like 27 crore, as per that report, like the 27 crore was used for the advance payment for this acquisition. But as per your latest communication, like we have paid only 7.75 crore for this acquisition. So like, can you clarify, like where is the balance amount has been utilized?
Sir, I think all of that money has been used for this acquisition only. I think there must be some confusion regarding that.
So if you refer that
sorry to interrupt, Mr. Pankaj. May we please request you to rejoin the queue?
Hello.
Mr. Pankaj, can we please request you to rejoin the queue? As there are several participants waiting for their turns.
So this question is a part of the earlier question, so I'm not yet completed. Yes.
I think all of that money, the general corporate purpose money, has been used, most of it, for acquisition of this company. And I think if there is some mismatch in the figures, we would check on that. But it has been spent.
And 7 crore was used for the purchase of machineries in Mumbai. The rest of the amount used for this purpose.
Yeah.
7 crore for purchase of machinery.
Yeah, I think 7 crore were used for purchase of plant and machinery for a construction project in Mumbai, and rest of that general corporate fund was used for this acquisition.
1.5 years.
So it has been clearly mentioned in that report that the 27 crore was used as for the advance payment for this acquisition. But yes, so and the actual consideration is only 7 crore. So like, what is the balance amount utilized?
Paid for the advance.
So 7.5 was advance.
No. So what is the actual consideration for this acquisition? Like, what is the acquisition value for this Bihari company?
Sir, namaskar, Paras this side. 7.5 ICRA was telling that 7.5 crore was paid advance for the purchase of this property to the existing, old our customer director was there.
No, as per report, 27 crore has been assured. 27 crore has been assured as an advance.
Sir, just listen. Sir, 7.5 advance paid. ICRA was telling 7.5% 7.5 crore paid advance out of this corporate purpose. Rest amount was next year used. You are looking this report, ICRA said 1.5 years back it was there. Now there is a CRISIL report is there.
No, I'm looking the January 25 report only, which is released in January 25. So there is
January 25 not at all possible. CRISIL was there, sir. ICRA was not there now. CRISIL has given me report, no sir. CRISIL February end.
So it is part of your disclosure. It is part of your disclosure only. Like you have disclosed on the exchange the ICRA monitoring report.
That is I'm telling sir. Exchange में हमने दिया था 7.5 crore advance given to Bridge Bihari Pulp. Agree for the agreement.
Mentioned 27 crore. So like there are 4 advance shown, which is 5 crore, 2.5 crore, 6 crore, 13 crore. So in total there it is around 27 crore.
7.5 advance given for the purchase of this property to the because the property was purchased 2023 by the 3 promoters. in which Rambir Singh was the partner of 25%, 50% was the other person, and 25% was the other person. He's acquired 50% share from the other person, for which the 7.5 crore advance was given.
So can you clarify, like, as per your disclosure of January 25?
I 100% sure 7.5 crore was given advance disclosure.
But as per your disclosure, it was shown clearly.
Just.
As per the disclosure dated January 24th,
Mr.
2025.
Can we please now request you to rejoin the queue, as there are several participants waiting for their turn?
हाँ सर, देखिए ना, उन्होंने लिखा हुआ है सर, एडवांस पेमेंट फॉर टेक ओवर ऑफ द कंपनी बिजवारी 5 करोड़ 20th August 2024, 3rd September 24 there we have paid 2.5 crore, 6 crore we have paid in 7th October, and 13.40 crore we have paid for this on 8th of October, 36.4789. Hello?
Thank you, sir. We have our next question from the line of Viraj Mahadeva from MoneyGrow. Please go ahead.
Hi, sir. Sorry, the last question went on very long. Out of your 2,200 crore existing order book, what are you likely to execute as top line in FY'26?
In FY'26, I think we are going to see a growth of 25 to 30%.
So about 1,300 crores, should we say? 1,250 to 1,300 crores is reasonable?
Yeah, I can't quote exact numbers, sir, but I can assure you that it's going to be, the growth is going to be in the range of 25 to 30%.
Understood. So while the PAT may seem good in terms of growth, the cash flows is clearly an area of concern for investors. The best of companies in EPC have gone wrong for one of two reasons. Either the debt piled up on the books, so I'd be keen to know what our net debt position is, and secondly, because the operating cash flows have consistently been negative. So I think उसपे आपको थोड़ा ध्यान देना पड़ेगा from the finance team, from a receivables collection point of view. Otherwise, you're going to have an issue down the road.
Yes, sir. ना तो सर हमारी बुक पे कोई डेट है, और आई थिंक कैश फ्लोज भी इस बार तो पॉजिटिव है सर.
Barely positive, it's not enough to sustain your business. No, you are going to have to keep raising capital, otherwise and diluting.
जी सर, पहले 115 करोड़ माइनस था
सर. पिछले साल 115 करोड़ माइनस में था, इस साल 33 करोड़ प्लस में है. आई थिंक द सिचुएशन इज गोइंग टू इम्प्रूव फर्दर.
Okay, good. Because आपका जो आप पॉजिटिव बोल रहे हैं, that's operating cash flow. Then you have investments, right, in capex. Your free cash flow is negative. तो उस पे ध्यान देना पड़ेगा. So while an operating level you turn positive, work needs to be done on working capital to make that number much more positive and get in a comfortable position.
Sure, sir, sure.
Right? Thank you. All the very best.
Thank you. We have our next question from the line of Dinesh Kulkarni from Finsight. Please go ahead.
Hello, sir. Am I audible?
Yes.
Thank you for taking my question, and I would appreciate good set of numbers. So my question is like, as on the one of the previous participant was asking about that Bridge Behari thing. I would just request you, because there is some concern or with respect to the payments and ownership of the asset. I would just say, if possible, just come up with one press release in detail, like what is the transaction there? Because I also had this question for the last few quarters, and I have been asking Mr. Ashish Tomar for the last few quarters. They just come up with all the details there and put it as a press release. Okay, this is the transaction. This was the ownership in the 3 years ago, 2 years ago, 1 year ago, and this is the ownership now. Because if see, the problem with the investors is, please understand this, if there is any related party involved, whoever it may be, chairman sir, CEO or CFO, anywhere, if there is any related party is involved in any transactions, then it raises corporate governance questions. You may be right on your part, I'm not questioning that, but the clarity is not there since the beginning. The transaction was announced maybe a year ago. So I just request you, first of all, to after this call, maybe you should come up with one detailed press release on that. What is the ownership of who is going to have the ownership of the rest of the company? Will it be with the chairman sir, or with the company, EMS company? or a subsidiary of it. Okay, so that's my request to you. Okay,
it is going to remain subsidiary of EMS, and
100%.
Not 100%, 60% subsidiary.
Yeah, this is what I'm saying, sir. This is what I'm saying. This question being raised with everyone, not just me and the previous participant. Okay, I'm just saying, give a complete detail of the ownership, of the transactions, of the payments made so far, and what is yet to be paid. What is the book value of the company? What is the market value of that asset? Okay, and what is being currently done on that asset? Like, is it really usable, used land or not, or it is just a blank, empty space or something? We have no idea. Put some pictures if required. Okay, that's my request. Okay,
certainly.
That will help, sir. Okay, and now I'll come to the question. My question is, sir, if you look into the cost of, like even on the standalone basis, if you see the cost of services sold from the previous quarter, like last year, same quarter, it was 92 crores and it has jumped to almost 167 crores. So the cost of services, right, or sales and services has gone up from 40% to 62.5%, exact numbers. Why is it so? Like, I mean, are we, taking orders in this quarter? Are we, given more lesser orders this quarter, or like what has exactly happened? Why is it so different for 2 quarters?
So the cost part will depend on multiple bases. Suppose in last quarter, multiple new projects were taken up and they were in the initial phase of execution. At that time, the investment is on a higher side, but I think going forward, we are going to realize revenues from these projects and the situation would improve.
So basically, we're expecting the margins, which we should improve in the coming quarters, right, including the current one.
Yeah, so because on mobilizing the sites and giving advances for procuring materials, we have to give out payments, and the material usually takes time for the delivery, and we don't book any revenue in that period, in the initial phase. But once that revenue cycle kicks in, I think the situation will improve.
Okay, sir. And how do you see, sir, you mentioned the revenue growth and all. I appreciate that. But we have seen even some companies as well in the same space. They're also reporting issues with the receivables, as one of the previous participants asked. Maybe there is a delay or God knows what's happening. But really,
that issue was, I think, related to the JJM projects. As told earlier, we are not executing any JJM projects. And we do not see any receivables issue.
So the receivable days should come down or it should remain the same levels? What do you think in the next few years?
Of the business, I think that would stay in the range of 90 to 100 days.
Okay. That sounds great, sir. Thank you. Thanks for taking my questions. And I just request you to come up, with that press release on that asset.
Sure. Thank you. Thank you for that.
Okay. Thank you very much. Yeah, all the best.
Thank you. We have our next question from the line of Rahul Agarwal from M&S Capital. Please go ahead.
Yeah, hello.
Yes, hello.
Hi, sir. Thanks for the opportunity. While most of my questions have been answered, I just wanted to know, apart from, we majorly work in the water treatment space, but we also work, in other EPC projects like roads and buildings, etc. So I just wanted to know whether this mix is going to change going forward, whether we might see more focus.
I think we are going to, sir, the mix is going to remain the same. We are going to be a water-focused company, and our water business would stay in the range of 70 to 80% of the revenue going forward also.
All right, sir. And I just wanted to know, I might have missed this detail, but the order book that we have currently, would you be able to just clarify how much of that is in the water space and how much of it is the rest of the stuff?
I think our order book that 2,236 crore figure is unexecuted order book.
Yeah, out of which 300 something is...
Out of which 331 crores is for operation and maintenance works of the water projects that we executed, and 1,900, almost excess of 1,900 crores is for capital works that are going to be executed. And out of this, I think somewhere around 1,500 odd crores would be from water business, and the balance would be from other businesses.
All right, sir. I think that answers my question. Thanks a lot.
Thank you.
Thank you. We have our next question from the line of Rishi Kothari from PI Square Investments. Please go ahead.
Yeah, thank you so much for the opportunity. I had two questions. First thing, what exactly happened? Why we saw a slowdown this particular quarter?
So I think I said it. There are some cycles. I think 2 or 3 are new projects were started in this quarter, and in the initial execution phase, we have to invest in the mobilization of the site, advances against material orders, and advances to TMP operators, etc. But I think going forward, this advance would turn into revenue, and the situation would improve.
Okay, got it. And apart from that, I don't know if this is correct or not, but we appointed a new CEO in the company, right now?
Yes, sir.
And what exactly is his name?
Yeah, Mr. H.K. Kansal.
Mr. H.K. Bansal.
Kansal.
Sorry, can you spell it? I'm not able to hear it.
Kansal. Kansal,
Kansal, okay. And they were a strategic advisor to our company probably for last 2-3 years, right? And now he's actually joining the board.
He said he joined recently. I was saying that he has been a sort of a mentor, but he was not at all involved in any official capacity. In official capacity, he has just joined.
Okay, and what's the background for Mr. H.K. Kansal?
Yeah, so he's a gold medalist from IIT Roorkee in civil engineering, and after that he joined UP Jal Nigam as engineer, and he executed various large-scale water supply projects and retired at the level of engineering chief.
Okay, got it. And my last question would be around, are we seeing any sort of government capex slowing for now, in the water segment, or are we seeing the same intact thing from them?
So the volume is very low. Can you please speak up and repeat the question?
I'm audible properly now? Hello?
Yes.
Yeah, I'm asking, are we seeing any sort of government slowdown in the water segment in terms of the capex? Is there some sort of slowdown you're looking at, or everything is intact?
None at all, sir. I think it is going to pick up, and suppose I think we are going to see huge business in Delhi in the coming years, and the recent push on cleaning of tributaries and distributaries of Ganga in addition to the main river. So I think there's going to be huge investment in this sector, and no question of any slowdown.
Okay, got it. And in terms of Waterline also will be able to maintain the margins for next 2-3 years of 20-odd%, right? So as you said earlier also, because of the project, we sometimes have to sacrifice the margin just to have that project in our order.
Yes, sir. So just to clarify, our performance must not be compared to other manufacturing companies. This is not an assembly line kind of business. So to gauge our performance, I think year-on-year performance and comparison would be much better than quarter-on-quarter.
Which I get it. So that's why we are seeing a more or less 20-odd% margin of PAT level is more or less intact. We are not going to see it sort of on a console basis.
Yeah, yes.
Okay, and just last clarification. I mean, you said that on a standalone basis we had a growth of 27-odd%, but on a console level we more or less, saw a dip in the margins. I think some sort of in SPV, right? What exactly was it?
Hello.
Hello.
Yes, sir.
Something on standalone basis, we actually saw a good growth of 27-odd%, but because of the other entity that is SPV, we saw a bit of dip in the, PAT level as well as revenues because of that whole new project that we're incurring, right?
Yeah.
Okay, got it. Yeah. Thank you so much. I'll join back.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, we'll take the last question from the line of Aman Soni from Invest Analytics Advisory. Please go ahead.
Hi. Thanks for the follow-up. Sir, you mentioned about some projects coming in from Delhi, right? So can you elaborate a bit on that? Like what kind of projects are these going to be and what is the size of opportunities and what kind of role are we going to play in these projects?
So I think the majority of the projects would be related to conserving the river Ganga and rejuvenating it. Majority of these projects would be in the area of sewerage and industrial effluent treatment projects. And I think the opportunity side could be anywhere about 10,000 crores.
And by when are we expecting these projects to start kicking in? Like, is there any bidding process? Have we already?
The tenders have already started coming in. Recently, there are 3 tenders that are online, and I think this rate is going to pick up in the coming time.
And what kind of success rate are we targeting? Because we are based out of these areas only, right? And we are having solid relations and execution capabilities as well, right? So considering that, what kind of success rate are we targeting in these projects?
Anywhere about 15%, I think, would be a fair target.
Like 1,500 CR kind of opportunity you are seeing for EMS in next 1 year, right? From these kind of projects. Is that understanding correct?
Yes, sir.
Got it. Thank you, sir. Thank you very much.
Okay. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today, and I would now like to hand the conference over to the management for closing comments.
सभी सहयोग के लिए धन्यवाद और हम उम्मीद करते हैं कि अपने कंपनी की तरफ से जो टारगेट फिक्स किए गए हैं आप लोगों के सहयोग से इसको निरंतर पहले की तरह अचीव करते रहेंगे और इस साल की जो ग्रोथ का हमारा टारगेट है 30% है 25 से 30% आराम से उसको अचीव कर लेंगे धन्यवाद
Thank you, sir. Ladies and gentlemen, on behalf of EMS Limited, that concludes today's session. Thank you for your participation, and you may now disconnect your lines.